right at the end of the stage, she is Anaga Ganti. Anaga, of course, coming from a very interesting place, and she can talk about cross-border flows. Anaga, let's hear maybe a quick introduction of yourself and where you sit in this market equation.
Good morning, everyone, and it's really a pleasure to be here. So my name is Anaga, and I'm from Hong Kong Exchange, based here in Singapore. So in my role, I work with institutional investors across the region. So this is asset managers, hedge funds, wealth platforms, as well as sell-side brokers, really working with them on accessing the opportunities on HKEX across the asset classes. So this is equities, ETFs, derivatives, as well as fixed income and currency commodities. So pleasure to be here.
Thank you so much, Anaga. Of course, next to her, we have James McKeon from NASDAQ. He's got a front row seat to all the data that flows through. James, where do you sit in this equation? What sort of points of view are you going to bring for us today? Just an introduction of yourself and where you sit in this market equation.
Got it. Good morning, everyone. Thank you very much for inviting me, first of all. So my name's James McKeon, and I run the data and analytics business at NASDAQ in Asia. I'm based out of Hong Kong. You probably know NASDAQ as the US exchange. We are actually a very diversified company. We run a stock exchange in the US, but also in Canada. We also own various different exchanges in Europe. We have a technology business, a surveillance business. As I say, very diversified. Looking forward to a good discussion.
All right, thank you, James. And next to James, we have Mina Kim from the CME Group. Mina, tell us a bit about what you're seeing. What do you do at your current role?
Sure. Good morning, everyone. Thanks for having me today. I am Mina Kim from CME Group. I look after equity index products and the cryptocurrency products for the region, sitting on the product side, working together with all the different various teams in CME Group. For those who are not familiar with the CME Group, CME is the largest derivatives exchange in the world, offer all the flagship products across 6 different asset classes, including S&P 500, NASDAQ, Dow, Russell Index futures, as well as WTI futures and gold futures. So very much it's a pleasure to be here today. Thank you.
Of course, a lot to do with risk management with all the tools available at CME Group. And of course, last but not least, we have from Lion Global Investors, he is Kwok Keng Han, the CMO.
Good morning, everyone. As Ryan has introduced me, Lion Global Investors is a homegrown, 40 years old asset management company. I'm here to provide the perspective of talking to all the institution investors around the region in Asia, what I have come across over the last 1-2 years.
Yeah, so lots to talk about today. But first, a bit of an icebreaker question because a lot of things have changed over the years. And I'm going to start first with you, Mina. What has changed when you talk about the big advantage that retail investors have today that they did not have before? How has the playing field leveled in that sense? Or has it leveled?
So
yes. What is something that institutions used to monopolize? How have things changed?
Oh, yeah. Sure. Yeah, of course. If you look back about 10-20 years ago, institutional investors, they had got everything. They had a better market access, market data access, and they had a sophisticated trading tool. And also they had a broader range of products to trade, which retail investors back then, even 10-20 years ago, like when I first started my career, they didn't really they didn't have access to all those different tools. Now, the gap has narrowed significantly. So you can actually, you're actually experiencing all those changes here now. So you have access to the AI-powered research tools, and you have access to real-time market data, and you're also using Moomoo platform, and Moomoo platform also provides sophisticated trading tools as well. So it actually has changed it, and also you can trade all the global products, global equities, global ETFs, and also futures and options, which just simply was not available 10 years ago. So I would say that this is it's a significant change, but it's not only about the accessibility, it's like really like, for you to gain access and giving you an capability to manage your risk and like, portfolio in a timely manner. And like probably now you have everything, right? Every tools. So probably the success comes from like really like, making the decision with a discipline and with a good risk management tool.
Yeah. So great point about accessibility. With your Moomoo app, all the AI features can help to give you access to a lot of intelligence to drive some of your trades. Ananga, let's bring it in. What has changed over the past years that you think has maybe helped to level the playing field?
So I think in terms of maybe just going back to Mina's point as well, I tend to agree. I think 20 years ago, it was really the institutions that had access to global markets, to information, to data, to modeling, all of these things. But today, anyone with a smartphone and a Moomoo account really has that kind of access to the information as well. So if you think about one advantage that sort of institutions used to have, I really think it's access. Today, a retail investor has exactly that same sort of information and availability. So the difference is then in judgment.
All right, King Han, let's come to you first. What has changed in your perspective when you look at how the landscape has changed?
When I started my career 34 years ago, it's really largely dominated by institution asset managers and professional investors. I think these days, when I look at Moomoo, it is a zero brokerage platform that offers real-time information data, and now they even have AI tools to enhance a lot of the customer journey. And I have some of my friends that is using these tools to actually create and curate their own portfolios. So this has changed drastically. It sort of narrowed the playing field for retail investors and against institution investors. I think on the platform itself, I can see that there are certain markets that are close to retail investors. But say, for example, Taiwan. If you want to invest in Taiwan, apart from all those ADRs, etc., you largely can't access Taiwan. Okay, but on Moomoo, you can get all those Taiwan funds, Korea funds, and you can access some of these closed market.
Yeah, accessibility is something that is really changing over the years. And of course, a lot of investors want to see the data. Where is money going? What are the big guys doing when it comes to investing? And James, I think this is where you come in. Where is capital actually flowing right now when you look at some of the market data, index flows, investor activity patterns? What does it tell you about where capital is moving and how investor behavior is perhaps changing?
Yeah, definitely. So, I mean, just to come on the last question as well, I do think I agree with everything that Annika said in terms of access. I agree with Mina. It's about the democratization of data. Don't forget that you have the same tools as a hedge fund. I mean, that is the great leveler. When you turn on your Moomoo app, you really do have everything that a hedge fund has. But the one other thing I wanted to add on that is education. I mean, 10 years ago, it was also very hard to get good quality education and really understand, especially if you're coming new into the market. You decide one day, right, I'm going to trade US stocks. Who is going to tell you how to do that? Who is going to explain how to do it? And I think Moomoo's done an amazing job at that, also partnering with the exchanges to be able to deliver that. But to go back to your question in terms of the interest in investors and where capital is flowing, you can't ignore there has been a seismic shift of investors from Asia investing in the US. And actually that's a kind of a broader trend around the globe. Investors outside of the US investing in the US, they've got holdings of about $17 trillion. And just to give you a picture of how quickly that has grown, that's up 97% since 2019. So the pandemic really fueled that, but also the success of many US companies and the fact that it is the deepest liquidity pool in the world, and you can get great returns from the US market. In terms of that growth outside of the US, most of it is coming from Asia. And if you dig even more, you actually see that it's mostly coming from retail. And I think that's where you get to investor behavior changes. Retail investors, it's a different type of investor, but it's also changing the market. I'm going to talk about it a bit later, but the US exchanges are about to go almost 24 hours during the week, 23/5. And that change has been driven by retail investors, which I think is the first time that the retail investor has really driven market structure change, which I think is really interesting.
Yeah, retail investors driving a lot of changes. Anaga, coming to you, Hong Kong Exchange sits at the intersection of international and mainland capital flows. What are you seeing when investors are allocating their portfolios? What trends stand out for you in those markets?
Thanks, Ryan. I think the context is that investors are deploying capital in a very dynamic and uncertain environment today. So that's something that we really have to keep in mind. It's different from maybe 20 years ago. So when they are looking at opportunities in this environment, they are becoming increasingly selective because they want to favor opportunities that have strong structural growth drivers, deep liquidity, and the ability to manage risk quite effectively in this environment. What we are seeing is that capital is returning and favoring Hong Kong and China opportunities. And I'm going to share some data with you to show this. Hong Kong cash market traded around $36 billion on a daily basis in the first half of 2026. And this is about 20% up year on year. In fact, in June, Hong Kong is trading about $41 billion on a daily basis. In terms of IPOs, Hong Kong raised approximately $27 billion in the first half. And this is almost double from the amount raised before. So it really underscores that demand from investors, both international as well as Chinese mainland. I think the second trend I also want to highlight is what I'm seeing in terms of capital flowing into China's innovation economy. We're seeing increased investor access and interest across innovation-focused sectors. So not only AI applications, but AI technologies, semiconductors, advanced manufacturing. And then Hong Kong's IPO market in the first half also reflected this because TMT and AI-related businesses accounted for about 60% of the IPO issuance. So I would like to say sort of two key trends that I'm seeing in that space.
So it does look like money is flowing into China from somewhere else. We'll get into those talking points as well. King An, let's bring it into this conversation. You're on the buy side. You decide where money is going. Where are you finding the right places to go, Naira? How do you decide where are the conviction places to go?
We do monitor the money flows quite closely. If I could, I share some ETF fund flows report for US ETF and Europe ETF. In US, second quarter saw an inflow of 560 billion, of which 406 billion went into equities. And then in Europe, it's likewise a same story. 138 billion went into ETFs, 70% went into equities. So it's largely growth environment over value. One other point I would like to share is also in terms of commodities, precious metals. In US, there's an outflow of 6.7 billion during second quarter, but in contrast, Europe has seen an inflow of 2.3 billion into all these gold ETFs. In Asia, I would say that there has been a lot of inflows on Hong Kong Exchange. I think easily there's a 3 gold ETF, and then we launched a gold ETF ourselves after 20 years on SGX. So I would say that there has been a flows of precious metals ETFs flows from west to the east. Okay, that's one point. But following the earlier session, Yao Long and the whole panel was talking about Singapore. Singapore, this year, my business has enjoying a boom time. We have 3.0 billion of net inflows, of which 1.5 billion are all going into Singapore equities. So I could share with you further on why is that so. We are the only one out of the 9 EQDP managers that won the mandate using an existing fund with 36 years stellar track record. Okay, so it's proven, but if you look at money flows, of my 3 billion inflows, half of it come into my Singapore equities. So I can share further. I think there's other.
Yeah, we'll get into all of that in a fair bit. Very interesting points about how gold is getting a lot of interest, not just how, but where the underlying asset is, and also how Singapore stocks are getting sexier again. Maybe STI 10,000 soon. So we'll see about that. Mina, let's get into this conversation. So talking about buying from an exchange product perspective, where do you see the strong demand and hedging flows from institutions?
Sure, that is a great question. So, like what we are seeing here from CME is that the institutional demand is like becoming more and more broader than simply just taking the directional views. And increasingly, we see like more investors are using derivatives, futures, and options to manage their portfolio risk rather than like just simply as a trading tools. So the clear trend, first, what we are seeing is the portfolio diversifications. So more and more investors they want an access to the global equity markets, and while complementing or even in some cases they try to replace their OTC portfolio using the listed, centrally cleared listed derivatives. And so we actually do see the institutional investors, instead of using OTC swap, equity swap, they trade equity index futures and options, namely our flagship E-mini S&P 500 futures and options, or even NASDAQ futures and options. And we also cater a lot of demands for the institutional investors, like sector futures or broad-based index futures, all the different type of futures. And the second trend is the continued growth of the options market, because as you can actually feel that really the volatility has become norm this year. And the way that how the institutional investors express their view or effectively manage their risk, we could actually definitely see the growth from our options volume. Because for example, our equity options volume in a CME is trades almost 1.5 million contracts per day across all the major indices. So that's another area that we are actually seeing the growth. And because of that, we very recently also rolled out financially settled micro E-mini S&P 500 and NASDAQ 100 options as well. And finally, what we are seeing is that the demand become actually much more granular, because not only just taking the view of the broader market, the investors and the institutional investors, they actually want to take the very specific view. So that demand is actually creating some more products to meet their demands, and we are actually preparing even smaller size contracts, which we will probably announce next week. So I'm not supposed to talk about this, but there's going to be smaller size benchmark futures available on CME Group pretty soon. And also if you are aware, we are actually preparing a big launch, namely single stock futures on US names. And of course, we are catering 55 names and the standard size, but because of the demands for the granular exposure, we are also rolling out the micro size single stock futures as well. So overall, the market is evolving from simply what to trade to how efficiently we can actually measure risk using different sizes of products.
All right, many ways now to buy the upside, but also protect the downside. And I think let's get things going into diving into some of these conviction calls. You talk about where capital is moving. Let's talk about where exactly to buy. And this is where I'm going to get Keng Han to talk about AI. Everyone's been talking about AI in the past few years. I think it's been quite a big topic. From a multi-asset perspective, Keng Han, is the AI trade still intact? Is it still early innings? Are we seeing this evolve, perhaps broadening to other areas? How do you see this when you're looking for returns?
Okay, from Lion Global investors' perspective, a lot of our Asian portfolios, we are quite overweight in AI. We think that AI is still early. A lot of people are uncomfortable because it's at very high level. But if you look at it, if this thing is going to continue to realize in actual profit, re-rating, this is still a long way to go. So if you look at my Korea fund, is quite heavily tilted. Taiwan fund as well. That's why I think Korea fund is one of the best it's the best performing during first half. And I think the whole thing is whether AI trades is going to continue to show results. ASML and TSMC recently just mentioned that the demand from hyperscalers are continuing. So the demand is still there and easily stretches out to 2030. So I think the trade is still there. It's still early. And as an active manager for our active portfolio, we do express accordingly.
All right, CapEx spending, like pointed out, still going up in the AI space. Also, a lot of IPO activity going on. Anaga, let's talk about what's happening with Hong Kong. There's been a strong run of IPO activity over the past year. A new generation of companies coming forward. What sort of characteristics are attracting investor interest in these newly listed companies today?
So from an exchange perspective, I think we are a platform. So we really focus on providing access to companies across a broad range of sectors. But having said that, we have definitely seen a very strong wave of listings across AI, healthcare, advanced manufacturing, and other innovation-driven sectors. So more broadly, what we are observing is that investor interest has actually broadened beyond, a small number of large technology names to a wider range of innovation-driven businesses. So that's a trend we're observing. I talked about the TMT sector earlier, talking about how much IPO issuance was there in that particular sector. But one more point I want to mention is in terms of investor interest. So institutional investor interest in the TMT sector has actually been average institutional subscription has actually been about 15 times, and retail has been more than 2,000 times in this particular sector. So really underscoring the demand for AI-related businesses. You asked me what are investors looking for, right? Maybe I can say two things. Investors are very smart. Now they are looking for the ability to commercialize this innovation. It's not really just about innovating, it's about commercializing this innovation. Not focusing only on breakthrough technology, but focusing on companies that can translate that technology into sort of real products, revenue, sustainable business models. Second is global competitiveness, I think. So many of today's IPOs that we're seeing are really participating in global supply chains and serving international markets, international customers beyond their home base. So maybe one data point to share here, 60% of Hong Kong IPO in first half of 2026 generated overseas revenue of more than 50%. So really underscoring that sort of global market, global interest, and global supply chain.
Right. Investors saying, show me the money when you talk about commercialization. All right, James, you heard from Anaga, you heard from Keng Han. Do those points of view align with your data about where investors are going?
Yeah, I mean, very aligned. It won't surprise anyone that in the US market, the conviction is also in AI stocks, but also around the sort of infrastructure around AI. And you can see that in trading data, you can see it in capital raising, and you can see it in the type of companies that are choosing to list, but also where they're choosing to list. A couple of examples from the last year that Nasdaq's really proud about. First of all, one of the biggest companies in the world, Walmart, supermarket business, they chose to move their listing from New York Stock Exchange to Nasdaq because of their AI story. They want to be an AI-first company. They need to compete with the likes of Amazon, so they moved their listing to get the kind of investors that invest in Nasdaq stocks that are more AI-focused. And then, of course, the mega listings. There's SpaceX, SK Hynix last week. Those are all showing the big trend towards those type of companies. But what I think is really interesting is actually the retail participation in those type of companies and how that has grown. 10 years ago, if SpaceX had listed, probably most of the allocation would have gone to institutionals, but now that is not the case. So on SpaceX, it's about in the low 20% of retail allocation. That is a lot higher than most normal IPOs, which is more around 10. And again, it shows the power that retail investors have. Also, of the the other thing that Nasdaq is really proud about is the top 10 traded stocks in the US. They are all in this AI infrastructure world, but they are also all listed on Nasdaq. And we are proud to have become the venue where those type of customers come to list.
All right, Mina, let's bring into this as well. What flows are you seeing right now in this very dynamic era?
Yeah, so I'm glad that you mentioned SpaceX as well, because that's part of our single stock futures. We are launching just in about a week. So AI theme, it continues to dominate the investor attention, and certainly we are seeing that flows in the CME group as well. We offer Nasdaq 100 index futures and options, and we do see exceptionally increasing activities in this space because of this AI theme. And if you think about the companies representing all those AI themes, but heavily they are actually representing Nasdaq 100 index itself. So we do see investors using this Nasdaq 100 index futures and options not only to manage their risks, but also to express their views around earnings or macro events, or even at a heightened volatility event circumstances. So that actually speaks to our data as well, because this year, especially in June, we had record micro EMI and Nasdaq 100 futures trading volume. Daily ADV was more than 3.2 million contracts per day. And similarly, Nasdaq options, every day it trades more than 98,000 contracts per day this year, which is up 11% from last year, and that's another record year. And also, not only at the index level, we do see that people are actually trying to broaden their scope within that AI theme. So to give a good example is that this single stock futures. So we are rolling out this 55 names of single stock futures on US names in about a week time, and that actually includes all the Magnificent 7 names, so you can be actually more specific trading those technical stocks names and all the infrastructure or popular names. Now you will have the ability to trade index level Nasdaq 100 index plus those single stock futures levels names. So overall while AI kind of remains the dominant investment theme, we are actually seeing that investors become more and more selective in their view trading those AI theme here.
All right, getting a good sense of where capital is going. And at this point, I want to give you a also opportunity to ask questions. And if you want to ask a question, you can head over to slido.com and key in our number for this panel, which is 310-6982. 310-6982. If you have any questions you want to ask the panel, you can drop it in and we'll try to squeeze it in if we can. All right, moving on to what makes a market attractive to global institutions. I think it's not just about there's value there, but also how can we get access? How connected is it? Anaga, how important is that when you look at it from an exchange perspective?
So to answer this question, actually, I want to give you an analogy. And I think as Singaporeans, a lot of us will probably understand this very well. So when we go for a holiday, or when we're planning a holiday, we will spend a lot of time comparing airline seats, hotel reviews, food, restaurant reviews, etc. And then we're always trying to scout for the best deals or lobang, right? We're trying to do that. And I think institutions do the same thing when they are looking at markets. So they are constantly comparing where they can deploy their capital most efficiently. So what will attract an institution to look at markets or how to deploy capital? I would say it comes down to 3 things: liquidity, connectivity, and confidence. Liquidity, because obviously the institutions need to be able to deploy this money and manage their risk effectively. So if you look at Hong Kong trading $36 billion on a daily basis, supported by both international and Chinese mainland participation, it does check that box. Connectivity, because institutions want seamless access across markets and asset classes. And a point to note here is Southbound Stock Connect. the turnover in Southbound Stock Connect averaged $16 billion a day. So it accounts for almost a quarter of the Hong Kong cash market. So it is really that structural source of liquidity for Hong Kong exchange. And confidence, because governance, transparency, market infrastructure really matter more. And we talked about how environment today is dynamic, is uncertain. So this really does matter quite a lot to institutional investors. And increasingly, I think investors, institutions, both retail institutions, are all looking beyond just cash equities. They want that complete ecosystem to manage opportunities, manage risk, build diversified portfolio access. So HKEX ecosystem can offer them just that.
All right, thank you so much, Anaga. At this point, let's jump into some of the questions we're getting. Thank you so much for sending them in. It's a whole bunch. And King Han, I think I'm going to ask you the first one. With the current US Trump administration, how confident are you with the US equity market, and how can Moomoo's tool help general investors? And I'm asking you this because you have to decide, where do you allocate your capital? Singapore, US, elsewhere? So how do you see US markets now with what's going on everywhere?
Okay, I have been having conversation with a lot of institutional investors in Taiwan, Japan, Malaysia, China, as well as Singapore. A lot of them are over-owning US equities. You look at MSCI World, US constitutes around 63% of the MSCI World Index. How much is Singapore? 0.5. Okay? Then if you look at like Singapore, is it trustworthy? We are one of the few AAA rated countries around. Historically, our daily traded volume are not high enough. Okay, but this MAS Equities Market Development Program actually stimulated a lot of activities around the ecosystem. The liquidity or daily liquidity is now 18 years high, the highest since 2007. And I think for those of you who are active in Singapore equities, you can see that there is a lot more activities. DBS is like $70. OCBC around almost, I think, $30. So the large cap has been benefiting. The small and mid cap, I don't think they have been ignored. So just now take the example. Singapore is only 0.5% of MSCI World. US is 63%. But over the last 5 years, Singapore equities has returned 94%. US S&P 500, which is one of our very popular product, has gone up 69%. Okay? Can you imagine you overweight Singapore more? What does it do to your overall portfolio? It's not just equities. Okay, just now I mentioned that Singapore equities has an inflow of $1.5 billion. The Singapore bond is the same story. It was told to me by my Japanese clients. Having a Singapore bond blended with a global bond portfolio over the last 10 years, double the return, but at half the volatility. Okay, so Singapore has been largely ignored. So I would think that if you go to my booth, you'll see that we are doing this Singapore Signature Series, where we have Singapore equities on MAS EQDP program. We have Singapore bonds, which I mentioned about the risk return, much better optics than a global bond, global aggregate. Then also, I think a lot of you knows that we have a gold fund that was launched after 20 years and listed on SGX in March. So you can build a multi-assets portfolio, and I think there's a lot of, I have a lot of conviction in Singapore, okay? Unless you think that DBS will die, right?
Yeah, of course, the Gold Fund also parked in Singapore, by the way. So right here. And
I
we have a
may
question
just
about
like,
capital flows, AI being profitable and translating to everyday usage. So it's definitely getting a lot of momentum there. Please give us a more detailed explanation of such ETF or funds. What are options out there? What are the percentage of institutions' investments in these sectors? Perhaps James is something you can talk about when it comes to the data you're seeing as well?
I can't really hear the question. Is it the second one
yes,
here?
that one about AI, ETF or funds. What sort of options are out there, as well as what sort of percentage of institution investments are we seeing?
Yeah, I mean, I can't really answer that question. I can't give investment advice personally. But maybe I can actually just come back to the comment before and maybe answer the question you asked to Annika as well. I think you're right in terms of comparing the Singapore market to the US market at a very high level, but you're talking about apples and pears. You know, the US market is extremely large, thousands and thousands of listings. I think if you look at the returns of like Tesla, for example, you'll see that, you know, there are really big returns there. And I think that's why actually the AI tools are really important. When you have a market as big as the US, you do need those tools to break it down, decide where your conviction is, and then work out the stocks within such a large market to invest in. And I think to the question that you asked to Annika before in terms of why people are choosing a market, why do people choose the US market? I think they choose it because you look at a market, you want to know there's liquidity. You want to know you can get in and out of a position. Well, the US market offers that. It's the deepest liquidity pool in the world. You want to know that your money is safe. You know, US markets are governed by the SEC, have been extremely safe over time. And transparency. You want to know exactly what those companies are doing, you want to know what they're reporting, and you want to know that those companies are controlled by that governance. And again, that's what the US market offers. But the new thing I think that investors are demanding is access. And I talked a bit before about the markets that are going towards 24 hours. The US markets are going to go at the end of this year to 23 hours a day, 5 days a week. Think about what a huge change that is, and compared to all the other places you can trade today. You know, investors today are used to being able to invest in futures 24-hour or crypto 24-hour, and now the equity markets are coming to that as well. So in December this year, on December the 6th, NASDAQ will launch 23 hours a day, which will give you that fourth factor. So you still want liquidity, transparency, regulation, but you also want to access on your time. And I think for a Singaporean investor, you know, you want to be able to trade Tesla, for example, at 10 a.m., not 10 p.m. And that's what you'll be delivered at the end of the year. And we're super excited about that.
All right. Thank you, James. Oh, those are great questions. Thank you so much. Now, to wrap up our time together, I'm going to go down the line one last time. We've talked about the tools, the data, but ultimately execution comes down to mindset. Mina, what's one piece of advice for retail investors to walk away with from today's session?
Sure. Like, if I may give one advice to the retail investors, when you actually put your trade and think about your transactions, not only think about only the upside, but always think about the downside risk. It's all kind of good advice you probably have collected today. I can even talk about the data, especially Singaporean investors are really, really sophisticated and outward looking, and they're actually very much actively using the global products, including CME products, because I can even tell you that we do see from the data that more than 200,000 contracts per day of CME listed futures and options are traded by Singaporean investors. That kind of speaks how actively people are actually managing the risk, especially the US market. But why I'm saying the downside risk, because when you actually invest, you cannot only think about an upside potential. You have to question yourself, how much money you are going to put in, but also are you prepared for your loss? And if that happens, what are you going to do, right? So think about it. Markets will always give you opportunities. You have a deep liquidity around the clock across cash market and futures and options market, which trades heavily every day, 24 hours, 24/7. Just it's more of think about protect your capital, because all the way long, the success will be for those who are actually be in the market long enough to for the compounding to work.
Okay, thank you so much. Well, Anaga, let's hear from you about your advice, and you squeeze it in 30 seconds. That would be awesome.
So not advice, definitely not advice, but maybe a perspective that I would like to leave with. And at the risk of sounding repetitive, I do want to say the same thing. Access has never been better. Information has never been more readily available. So whether you are managing $1,000 or whether you're managing $1 billion, you are increasingly using the same tools and accessing many of the same opportunities. So then what do you need to think about? You need to think about how you're using that access. So the fundamentals that institutions are focusing on, and we did speak about a lot of this during the panel: quality, liquidity, diversification, and risk management. Those will be the relevant sort of principles to think about when you're building your portfolio.
Yep, that risk management theme really coming across very strongly. Keng Han, what's your takeaway that you want investors to walk away with today?
Okay. This year, volatility is the only thing that's very certain. So diversification is the only thing that you can actually use free. Okay? Then you have to look at your personal circumstances, what you're comfortable with, constructing the portfolio. And I think the panel share a lot of different perspectives. For all the retail investors, I think it's good for you all to actively participate events like the MooFest to gain perspective from different panelists. So you have people from US, NASDAQ, you can have Hong Kong Exchange, and you have CME here to share, apart from all these portfolio managers, which we host very often event to update you all. Because this will keep you abreast, apart from the real-time information you can access on Moomoo, is to digest and make sense of it. Okay? So you need to have that to build a very, very resilient portfolio. So LGI, Lion Global Investors, is 40th anniversary this year. We are focusing on building the journey and helping our clients to create a resilient portfolio and solutions.
Yep, information access. Of course, you can listen to Money FM as well if you have time. James, how about you?
I'll be really quick. So I would suggest go into the Moomoo app, take a look at the education, look and learn how to use the data that you have. Moomoo gives you total view data from NASDAQ. That data is the full depth data. In a market that's highly liquid, you need to really look into that order book to understand the dynamics. Where's the support and resistance? What's real versus fake liquidity? You can do all of that with total view. There are videos on the Moomoo platform and on YouTube that we did together with Moomoo. Have a look and use that data to your advantage.
All right, awesome stuff. What I've heard from this panel so far is that the world is more accessible, more transparent, and more navigable than it has ever been, as long as you have the right tools and the right knowledge. And that exactly is what today is about. Please join me in thanking our panelists today. Thank you so much, guys.